Hello, welcome to the Real Estate Regroup Show. I am your host, LJ Walker, a real estate investor helping you realize your dream of owning a home or investing in one. Today's show, the question is, should you pay off your home early? There are some people that say, do not pay off your mortgage because it is best to invest your money in the stock market. They claim that you can make more money there as opposed to locking up that money into a home. Then others that say you should use the money to buy more property. This way you own more, you have more tax write-offs. Others say pay it off. It'll give you peace of mind, lessen your debt load, and definitely your expenses. What I say, as usual, it depends on many different factors. First, let's look at your contract. If your contract says that there is a prepayment penalty, well, you might have a hard time. It may be a little bit costly for you to go ahead and pay your mortgage all off at one time. You might be able to negotiate, but truth be told, it's better to negotiate before you become a homeowner rather than after you become a homeowner. You see, the banks and mortgage note investors, we make money off of you when you agree to the prepayment penalty. That's extra income coming in. So they might not necessarily be too obliged, if you will, to let that go. Maybe they might forgive it if you prove to be somebody who pays on time, but most of them are not going to be too happy with you doing that. Plus, not only that, when you pay early, the banks make money off of the interest that is charged to you. So paying off your money early, they lose a lot of that interest. So that's another reason why they may not drop the prepayment penalty. You see? The next thing, of course, is let's say you don't have that prepayment penalty on your loan, then it boils down to what do you value most and what are your goals. Plus, let's not forget what the numbers are going to say, which can better guide you as to what it is that you need to do. However, there is still one other factor, and that's your temperament. What can you handle emotionally? You want to be able to curb and control your emotions, but let's be real. Many of us have different dispositions. There are things that we can handle, and then there are things that we can't handle. There's a lot of people who tell me they don't want to be a landlord. They don't want nobody waking them up in the middle of the night trying to fix X, Y, and Z. Other people say they don't want to be a rehabber because they don't want to deal with contractors. So you gotta ask yourself the question after you do the numbers. Next thing is ask yourself, when do you want to retire? In my opinion, and in most opinions of other financial advisors, they'll say that it is best to pay off your home before your retirement date. The reason why is because a lot of times your income goes down. And even though you get tax credits from the government and you're normally able, especially if the age is 65, you're normally able to get a whole lot of other discounts. It's still does not make up for the income that you got. Your lifestyle will definitely change, okay? Unless you decide that you want to go into your own business, or you started your own business while you were still working and you're going to keep your business even after you retire from the job, then things might balance out. That's why I say it depends on the numbers. Another thing is, if you bought your house on a subsidy, it might be best to try and pay it off before the subsidy expires. A lot of times when the subsidy expires, those taxes go up dramatically. A lot of people have had to sell their houses and they got hit once that subsidy expired. Some people actually, they were hurt when the tax exemption expired, because when you buy into a new development, you a lot of times will get a subsidy and a tax exemption. The tax exemption normally ends before the subsidy. Sometimes they end at the same time, sometimes they don't. For example, mine ended a while ago. It ended in 10 years, but the subsidy ends in 25 years. So if I sell this house, I have to pay back the government a certain amount of money due to the subsidy. So those are the things that you have to think about when you're trying to move forward. The other thing too that was brought up, some of you may have seen the man who paid off his mortgage in 3 months. Well, truth be told, I looked up, when does the average American die? The average American dies at 78. But personally, I have had friends die a lot younger than that. I've had coworkers also die at 35. I had a teacher when I was 9 years old who died at 30. I lost quite a number of people, to be honest with you, that had like either just turned 30, turned 35, 51. I know 2 people recently who died at 51 who are a bit close to me, and another guy who died at 62. So, you may want to look in your family history, see if there's anything going on, and make some sort of consideration as to, again, that goes back to temperament. If you get sick, even though there are resources to help you, can you handle the mortgage? Will you be able to handle the mortgage at that particular time? You see. And getting back to the markets, my feeling is this, as I mentioned in many other episodes, markets, both the real estate and the stock market, are very cyclical. It really depends when you enter it and what strategy you decide that you're going to employ. Okay? Because if you enter it during a recession, it might be good for you not to try to pay down your house. It might behoove you to buy another house during a recession. However, I would say before you buy another house, you should make sure that the one that you own is already making money. And also make sure your job is secure. If you don't feel that your job is secure, especially if that is the only job that you have and that's your only source of income, buying a house or buying stocks, bonds, mutual funds, etc., might not be your best bet. Now, what I would do though, if I had a job where I was skating on thin ice, so to speak, then I would probably invest in stocks that paid dividends or mutual funds that had dividends, because dividends is another way of making income. And you can make dividends when stocks go down or when they go up. Now, me personally, because I like to travel, I would buy like the cruise lines or Hilton hotels, because not only do they pay dividends, but you get like $50 to $250 credit, depending on which one it is, when you are invested with them. I'm not saying you have to do that. There are other stocks and whatever that have dividends. That's just my preference. Remember, I am not a licensed broker or a licensed educator in that area. I just know what I know, and I just have my own preferences. It's totally on you, okay? But yes, when there's a recession, if you know that your job is good, or if you work for yourself and your business is good, then yes, that would probably be an ideal time to buy more houses. And believe it or not, when the stock market has crashed, that is the ideal time, in my opinion, to buy stocks, because that's when it's cheap. When the market is high, it might not be the best market to buy real estate. And it may not be the best market to buy stocks either, because everything is too expensive at that particular time. You might want to look into mortgages instead. You can buy those. You might want to look into buying tax liens instead. Those will be a whole lot cheaper than buying property. And if you can buy subject twos, you can buy subject twos in just about any market, but subject twos tend to go up when the recession hits. You can also do owner financing. I wouldn't do owner financing when the recession hits. I would do owner financing when the market is up. That's just me personally. Those are my thoughts. After, processing, there are people who I know you're going to disagree with me. Go ahead and do so. As a matter of fact, entertain me. Put it in the comments. If you're on YouTube, my YouTube channel is called The Real Estate Regroup Show. And share with me your thoughts and what you would do. I'm interested in hearing. I am flexible as well as far as my investment strategy. Tell me what you would do. I'm interested in hearing. And for the rest of you, definitely feel free to share this amongst your friends. Remember, each one, reach one, teach one. Have them also subscribe to the channel, or just leave a comment and let me know what they think. Right? Bye for now. Until next time, have a good night.